So sometimes the analysts are correct. Most of the time, analysts are worthless completely. In a bull market, you don't need analysts, and in the bear market, you should all fire them.
And welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodities, stocks, and the economy. As always, I'm your host, Arlen Hansen. Certainly doesn't change. This interview is an investment advice. I'm not a professional advisor or a geologist. However, I have been investing and kicking rocks for over 25 years. I've visited mine sites around the world and have certainly learned what works and doesn't work in this market. Any financial interest Kin or myself has in any of the companies mentioned in today's interview will be disclosed. Be sure to do your own due diligence. Don't be an idiot and be buying stocks as people are talking on a podcast, please. Today, I'm bringing back the legendary Marc Faber, aka Dr. Doom, one of the world's most recognized contrarian investors, publisher of the legendary Gloom, Boom, and Doom Report, and author of the best-selling Tomorrow's Gold. He spent decades challenging consensus views and identifying opportunities where others see risk. Marc, great to have you back on the show. How you doing today?
Fine. Thank you very much for having me on your show, and good day to your viewers and listeners.
Oh, awesome. I love that. Thank you. I guess we're going to start. You've, in some of your recent interviews, you've started saying we're seeing the first signs the investment mania is beginning to crack. What are you seeing that's giving you some of that conviction?
Well, there are many symptoms surrounding a bubble, but one of them is excessive speculation. And it doesn't have to be excessive speculation in, say, Britain or in America or wherever. It can be in a specific sector of the market. Say, recently, a feature of the bubble was an incredible speculative enthusiasm and mania in Korean stocks. The whole country was basically speculating in the equity markets, specifically in two stocks, in Samsung and in SNX. And that is a symptom. But also in the world, when you have all the money flowing into micron technology, NVIDIA, the semiconductors, and Magnificent Seven stocks, and people buy these stocks without any true knowledge about the fundamentals of these companies. And they disregard the valuations. One has to become suspicious. Now, I explained that the top of a market is very complex. Like, if we talk about the commodity like coffee can peak out on one day and that's it. But the stock market is composed of different industries, of different companies, and is composed also in terms of weighting differently. So you can have an index. I compared it to the peak in the market in the late 60s and early 70s. We had the utilities index peaking out in 1965, and then the majority of stocks and speculative stocks, including aerospace and conglomerates, in 1968. And then the final peak was in January 1973, which was driven by the so-called Nifty 50. These were like 40, 50 stocks where people would argue they will continue to grow, and therefore you can pay any price for it. And we know what the result was. I mean, you look at Polaroid and Kodak and Xerox, a lot, and Sears and JCPenney, a large number on Boros also, a large number of these companies disappeared. So yes, at the time, I was kind of on friendly terms with the analyst at White Whale, which was the growth stock firm. And the analyst was covering Polaroid and Kodak, and she was telling people, how much eventually the Chinese population of more than 1 billion people, how many photos they would take. And it's interesting that the analyst actually underestimated the quantity of pictures people would take. They just didn't take them on Kodak films and Polaroid films, but they took them on the mobile phones.
Right.
So sometimes the analysts are correct. Most of the time, analysts are worthless completely. In a bull market, you don't need analysts, and in the bear market, you should all fire them
Oh,
because
you avoid them like the plague because they're fighting for their job. That's what they're doing.
yes. So anyway, but in that case, the analysts were correct. The world is taking today more pictures, photos than anyone would have imagined. I mean,
Oh
just
my,
think how
it's
many pictures
incredible.
people take on Facebook and
It's
on
incredible.
TikTok. It's unbelievable.
And you only see 1 out of 1,000 that's taken. Like it's
Yeah,
incredible how
I
much
agree with
content they
you. I
consume.
agree with you.
Wow.
But
Yeah.
it's remarkable how few people have really made money out of photography. When
Hmm.
you look at companies, it's all free of
Yeah.
charge.
Yeah, yeah, 100%. Well, it's kind of interesting. Like a lot of these investment manias or these booms really are around some of these revolutionary technologies such as this, right? So that kind of leads me to AI and this revolutionary technology. And it's so blue sky that people don't even know how big it could be. So they're creating all these stories in their head of how big it could be. Now, it'll never probably be that big, and that's where it will all collapse. That's my opinion. But where do you think we're heading in this AI, and where do you think we are in this mania of AI and how that affects the overall market?
Well, I think this AI bubble is well known and well recognized, and the companies that are involved in it are prized for perfection. You
Yeah.
understand? Just for them not to go down, the growth has to be uninterrupted and perfect.
Yes.
If there's a slight glitch, people will sell them. And I happen to think that, notwithstanding the rebound in the market at the present time, which is usually called the summer rally, that the semiconductor stocks and the Magnificent Seven have basically peaked out.
Hmm.
But, and here I have to say, there's a big but, and that is if the government, prints money, it's difficult to measure anything because the money printing lift asset prices. Then say we could have a bear market in stocks, but the stocks don't go down. Instead, say the currency goes down, and the currency doesn't necessarily have to go down. Say in the case of the US dollar against the euro, it could go down against precious metals, as an example, or it could go down against Bitcoin. I don't think it will happen against Bitcoin, but I believe that if the government and also the new Fed chair, I think they will be forced to print money and to keep the deficits going. He doesn't care whether
Oh,
inflation
yeah.
is 20% or 10%. It doesn't matter to him. In fact, for his hotels and so forth, nothing is better for him than high inflation
Right. Yeah,
and
that makes
low
sense.
interest rates, relatively low interest rates. even if interest rates are at 10%, if inflation is at, say, 13%, he will like it.
Yeah. Well, I guess it doesn't matter when you're the one pressing the button, hey?
Yeah, correct. You know, when the button will be pressed.
Yeah. So, like, what proves you wrong in this scenario? Is there a scenario that proves you wrong?
Well, I mean, in theory, the stock market within the next 2 years, I'm talking about in theory, if
In
you
theory.
print enough money, in theory, the stock market could double in a year or 2 years or 3 years. It's possible. But you then have to look at what is the standard of living of typical people. In my opinion, if we are in the environment of what was described about the 1920s hyperinflation in Germany, namely the hyperinflation scenario, in that case, everything goes ballistic and the standards of people go down like a stone, but he doesn't care because these people are the moneyed people. I also care relatively little as an investor, but I care as an economist and social observer because I think that this kind of environment will create huge social problems. Huge.
Okay, I want to go back to what you just said. And I think this is brilliant. I noticed that you separated yourself from an investor and how to make money and from an economist. Now, I think that a lot of people aren't able to do that, right? They think that an investor is who they are as a person, right? And so therefore, then they have to look at all the things of the economy and make the decisions based on that. So, but that's it. That's interesting that I just noticed that you broke that out separately, and I think that's very important when it comes to managing your money. Is okay, what's important to manage my money, and what's important from a societal point of view.
Yeah, these are two completely different
Totally,
matters. What is
totally.
as a portfolio manager, basically, you're interested that your net asset value goes up because then your fees go up and your wealth increases. But then, as an economist and social observer, you have to think what is the impact on society? And I can assure you, based on the literature, and I've read a lot, you can see the bookshelf that I have and so
Many
forth,
books.
uh, based on the experiences in history of periods of accelerating inflation, increase in the government debt, and money printing, the results have always been a complete destruction of the general wealth.
So what makes people think that this is anything different? Like, are they just absolutely convinced just by the media and by what the government says that this is going to be okay, or they've lived 20 years thinking that they just keep borrowing money and this is all going to be fine? Yeah, like you said, 100% of the time, it leads to destruction.
I want to explain a few issues that in this respect are important. Who does CNN and Fox and so forth interview? Not the man on the street and the poor people and the hardworking people, but they interview mostly the fund management industry. Now, the fund management industry, they sit in glass buildings and on Wall Street, and basically, even if they might know, and most people would not know, and the one know it all who has no clue about anything. Now, you have this group of people, they go on TV and so forth, and even in the remote case that they knew that we're heading into a very difficult time or a complete disaster, they will not tell the TV
Oh,
because if they tell the TV, they won't be invited again.
and it's not self-serving, right?
No,
Like, it's
no.
not self-serving.
And the clients will then call up and say, well, how can you be this bearish and this and that? You understand? So they will say something that is nice, that is boosting confidence of the people that buy the garbage. They want essentially, they are the asset holders. In their mind, they want to unload their wealth onto simple people who then overpay the price. And the simple people is like the family made money out of cryptos. And everybody who touched, and I have to say, you have to be really dumb to touch anything, but the media supported him. And anyone who touched anything lost money over time. Everybody.
Well, let's we could talk about that for a quick second here. Like, how come no one's talking about the Bitcoin bubble that just happened? $160,000 at Bitcoin. I don't know what it is now. I don't care. I don't follow it. But like everyone's talking like, oh, it's just a little bit of volatility. Like, come on, this is insane.
Yeah, yeah, sure.
It's like $160,000 for a piece of digital paper. I just, and no one's
Yeah,
talking about it like it was a bubble. Oh, whatever. Trillions got lost. In Canada, we had the cannabis bubble. Maybe a few hundred million, maybe a billion was lost, but it was like the world came to an end with the cannabis bubble. And this Bitcoin bubble robbed people of trillions of dollars, and no one's talking about it.
yes. But
Explain
as
that to
I
me.
said, Wall Street is very, Americans, that I have to say, that I also observed at the World Cup, they're very good at promoting any garbage.
Yeah.
Unbelievable. Other
Wow.
people would sort of kind of feel ashamed to promote as much as the US, but the US is
Well,
very good at it.
what I find interesting about it is that they're promoting to the people who want the wealth, right? They're
Yeah,
promoting to the people who are not yet wealthy. And those are the people who are willing to do whatever it takes to get wealthy.
yeah, yeah,
And they're
sure.
the ones who are most willing to believe that if I do this, I will become wealthy.
Yes,
Right? So they're preying
but
on the weak. They're preying on the meek when
yes,
they do this, right?
but I have to say one thing. You understand? People are through their lives and through their experiences conditioned to certain facts.
Without a question.
And one fact for the last 40 years, specifically since September 1981, we had a declining interest rate structure until August 20th, 2020.
It's a
So
40 years.
interest rates are coming down and asset prices around the world, real estate, stocks, paintings, collectibles, wines, old cars, everything tended to move up. And so the young generation believes things will move up. Okay. Now they also think that they know that money is losing its purchasing power. So they don't want, when I grew up, my grandparents said you have to put 10% of your salary into the bank on deposit, and then you have some savings and this and that. That savings are a disaster over time compared to stocks and compared to real estate. And so people, they bought real estate and stocks that kept on going up. I mean, I thought 2007, 2008, we had a real estate bubble. I thought real estate prices will never exceed that peak because it was very high
Hmm.
relative to incomes. Now it's about 3 times higher.
It's crazy.
but
Crazy, crazy.
but I said to you before, it leads to impoverishment. And in the real estate market, this is a very good example. Real estate prices have gone up, and according to Goldman Sachs, affordability is at an all-time low. That's why housing sales are depressed. You would think that if home prices go up, that there's a boom, that sales
Yeah.
transactions are very, yeah, no, it's not the case.
It's not demand driven. It's inflation
Yes,
driven. Yeah, yeah,
yes.
yeah.
So
No,
anyway,
totally.
I tell you, maybe stocks in nominal terms will continue to go up for a while, but obviously, uh, some stocks did not go up. Say in 2021, the meme stocks peaked out. And
Right.
the year, 2 years before, it was, as you mentioned, the cannabis stocks, they peaked out. And after the meme stocks were peaked out, were some blue chip stocks. And a year ago, some FANG stocks peaked out. And now I think we've seen the peak in semiconductors. But I wouldn't say personally, I don't sell short because
Hmm.
we have this money printing and it can go on for a long time. And I mean, he is basically from an environment, big money. His wife is a Lauder from Esther Lauder.
Yeah.
These are billionaires. They don't want to see the stocks collapsing.
No,
And
no.
he,
The billionaires are the greediest of all.
yes, and he has a Goldman Sachs background. He doesn't want the stocks to collapse either. So he'll be very careful in increasing interest rates. And in my view, interest rates relative to the cost of living increases are actually still too low.
Interesting. Interesting. Recently you become a little bit more constructive on bonds.
Yes.
Why?
I'm, it's difficult to be constructive on bonds, but my argument is in bonds, you may lose less money than in stocks.
Perfect.
That, I mean, the strategy that I have today is I don't think that gold is very cheap, but in an environment where they print money, maybe it's not that expensive. I don't know. But as a strategy, I have to say, I have a limited life expectancy from my high age already. So for my standards, I have enough money. I don't need more. What I need is good health and say a peace of mind and so forth, a nice environment, and then. But I don't need to make more money. But what I'd like to do is not to lose everything.
Lots of this. It's a good
So
idea.
my strategy is how do I lose the least money when the shit hits the fan?
Fan. Yeah.
And that I am convinced will happen. And big time, big time.
Yeah. And when the shit finally does hit the fan, is that one you're going to be really glad you hold physical gold and silver?
I hope so, but I want to explain. Say, you take a family. I live in Thailand, in the north. You take a lower class family in Thailand. Uh, they will own, as their wealth increased over time, they buy first a motorcycle so they can go to work and bring the children to school. And as they become more affluent, they will sell the motorcycle or keep it and buy a car. And as a security, what they will do is buy a life insurance and a health insurance, and then they buy a house for the family and so forth. And they will not own any stocks. But what they will do is when they have cash, they will buy some gold. Not huge, not a ton of gold. They don't have that kind of money, but they buy a few coins and so forth.
Hmm.
And when the crisis hit, they live in a house, they have to pay the mortgage, they have a car, it's on installment credit. They will keep on paying these things because they need the car to go to work. They need the car to bring the children to school. They need the house to live. And they don't want to lose face in front of the neighbors. So that they will continue to pay. But in emergency, nobody sees if they sell gold or not. So
Mm.
when things go bad, some people will sell gold, for sure. And that's why I say on the Iran war, when it deteriorates, they're selling on gold. And when the conditions improve and makes another peace deal, he's made quite a few already.
Still haven't seen one come through.
Well, he shouldn't get one Nobel Prize. He should get about 100 Nobel Prizes,
For all
peace
his
Nobel
peace deals.
Prizes. And anyway, uh, the, the when things deteriorate and asset prices go down, gold will go down as well, but much less than other things. And possibly, it is possible, not very likely, but possible that if, say, the stock market crashed by 80%, it's possible that gold would go up. It's possible. But I think it will also go down, but say only by 30%.
Yeah, I found in major kind of short-term crashes that gold becomes a liquidity event, right?
Yes,
It's like they're losing money everywhere else, and so they sell their gold to keep afloat
yes, yes,
almost, right? Yeah,
yes,
yeah,
correct.
yeah. Okay, where do we go from here? Let's talk about the energy market very quickly. We don't need to dive into it very like deep, but like how concerned are you about these energy prices and the pressure that it's putting on the market right now?
Well, if I compare the price of oil to the price of stocks to the price of gold to everything else, oil is actually quite inexpensive. Not as inexpensive as wheat, corn, soybeans. Agricultural commodities are very cheap at the moment, but oil is not terribly expensive at this level.
And why do you think these agriculture's commodities are very cheap right now? That's weird to me. That's weird to hear.
Actually, this is a very good question. Why are agricultural commodities so cheap? I suspect that the technology to produce wheat, corn, soybeans has improved dramatically. And so the yields have exploded in countries like China and India and other countries that can produce these commodities. And as soon
Interesting.
as the prices go up, farmers plant more. So,
Of course, right? Because we want to make more money.
yes, so, but it's not an entirely satisfactory response. And the satisfactory response to the question about why is food so cheap compared to other things in the world? I think it may be sort of a mispricing, and it would not surprise me that food prices will go up in the next 2 years significantly.
I don't see I don't see a scenario where it can't. It just feels that way, you know. Less agriculture
Yes,
land,
but
more expensive. Water will be more expensive. Everything you need to
yes,
grow
yes,
food
I
just
agree with you. Water.
continues to go up and up and up, including the equipment to farm is going up. Like it
Yeah,
just
yeah.
doesn't stop. And I'm curious, it's like, by the time it reaches our grocery stores, right? Like what kind of mitigations in there by the government on if it is being mispriced? Because like if food actually doubled in price over the next 6 months, their citizens would lose their mind. Like it would be like civil war inside your country, right? Because people already are stretched in Canada, at least, for their food bills.
This is why I'm saying when we look at an economy, we shouldn't just talk to the people on Wall Street. You understand? Because the Wall Street
Totally.
are not people representative of the typical American or typical Canadian. They are people, they have a coat and a tie, and they basically don't care much about food prices. They care a lot about the price of cocaine and other hard drugs.
That is such a reality though. Like their
Yes,
perception of the
of
world
course.
is they're like locked in this glass house thinking that this only thing that works is how much money they're making. right?
Yes.
Yeah. So like that is a really interesting perspective. They're stuck in that perspective.
But the housewives, they know, and ordinary people who get salaries, they work in factories and so forth, or they work in big companies, they're a lower end employee, a clerk or whatever. They spend a high percentage of their income on necessities of life, including rents, food, health care, education, and so forth. They suffer from this inflation. Do you think cares whether steak at his steakhouse costs $60 or 65 or $70? He's never paid a bill in his life anyway.
Yeah. It's like you and I buying a little stick of gum, like honest to God, like that's what it means to him. It's not even a stick of gum, right?
Yes.
Yeah. I got a couple more quick questions here for you, and they don't have to go deep, Mark, but just
Okay.
so we can wrap this up. One investment almost everyone owns that they probably shouldn't.
Semiconductor stocks, AI
Yep.
related stocks.
Yeah. Yeah. One investment almost nobody owns, but they should.
I think what we just talked about, some food related companies.
Okay.
And I think also utilities might be okay.
Okay.
Not necessarily priority, but I think defensive sectors are neglected. Anything that doesn't move is
Mm,
neglected. Until recently, uh, Thailand as a stock market was neglected. It was considered to be a failed state, a rotten state, doesn't now work anything. But the stock market is now up almost 25% this year. And one
interesting.
stock market that I think is now becoming attractive is Indonesia.
Yeah.
I think Indonesian stocks are in a buying zone, in a buying range. I think gold shares, mining stocks, they had a huge run in 2024, 25, and 26. They have not performed well. They have come down a lot. But I think precious metals are sort of in a bottoming phase
Feels like it.
from which the next rally might start.
Yeah, I actually kind of agree with you on that one too. Last and final question, Mark. You've lived through almost every major financial cycle over the last 50 years, right? If there's one piece of advice you could give to young investors like me heading into the next 5 years, what do you think it would be?
I think it's important as an investor, but also for you yourself, for your confidence and for your happiness to have reserves when other people don't have them. In other words, I always have a lot of cash. I like cash and like cash flow because if you understand, say you have a property and it yields a certain amount and you get every year a certain quantity of money. The value of the property may go up and down, or the value of the stock may go up and down. But if the dividend is relatively safe, I have to say, not all dividends are safe, but say there are lots of companies that have paid dividends. Occasionally they cut them somewhat and then they increase them again. But the cash flow gives you flexibility. When the most important as an investor is to have money when things are cheap, and when things are cheap, by definition, other people don't have the money. Otherwise, they wouldn't be cheap. You don't want to have the money when stocks are high, like they are now. Valuation wise, we're at the highest valuation ever. We want to have money when things are bad. My only worry is when things are really bad, maybe the banks are all bust and we don't have the cash either.
That's yeah, that's fair enough.
You
Actually,
understand that's why I say physical gold may not be a bad option.
Yeah, I'm a big believer that when things get really bad, we ain't getting the money from the bank. But that's my little tinfoil hat
Yes.
theory, you know. So, Mark, always a pleasure talking to you. I love speaking to people with your wisdom and your
Wisdom.
humor, but like your experience, right? Like you see things how it is. Like it's just and you call it how it is. And I
Who
appreciate that you're
knows?
not just another talking head from the media. And yeah, you're right. Who knows? We don't know what happens tomorrow. Like for us to claim
Yeah.
that we know
Yeah.
what's going to happen tomorrow is ridiculous as well. But
Yeah.
I do appreciate your insight, Mark. Thank you very much.
Okay. Thank you
Okay.
very much. Bye bye.
Take care, my friend.